Well, with that, let's now put the spotlight on the CNBC-TV18 news break confirmation. This, of course, happened just after market hours on Friday. Aster DM will merge with Care Hospitals to create one of India's largest hospital chains. The new merged entity will be termed as Aster DM-Quality Care. And it was our colleague Rachna who got you that story. So she's got it spot on, and she's joining us in the next couple of seconds to take some more questions with the management. We have Alisha Moopen, Deputy Managing Director at Aster, with us. Alisha, good morning. Thank you for joining in. So we went through all the details. I mean, for the benefit of our viewers, this entity is going to have a combined bed capacity of over 10,150 beds, I think, and a revenue of about 7,300 crores. You already have targets of adding more beds as you go along. Let's start with the basics. What are the synergies? Because you're also saying that this merger is going to be EPS accretive from year one itself. So what's the thought? And, what is the kind of competitive might you're looking to build in the industry through this merger?
Thank you. Thank you, Surabhi. Yes, we're really excited about the merger. Exactly as you said, this will make one of India's largest healthcare providers with more than 10,150 beds. Now, when you look at the combined synergies, scale is everything in India, and especially in healthcare, it helps a lot. So when we were looking at it, when it comes to cost synergies with buying the capex, buying materials, when it comes to insurance negotiation, when it comes to corporate costs, we see a lot of synergies. But even if you just combine forces, when we look at our margins right now, EBITDA margins around 17%, it actually moves up to 19% in a post-merge scenario. So, which is why, exactly like you said, it's EPS accretive from day one. This merger, it values the entire deal at more than $5 billion. So we believe that this is one of the largest healthcare transactions this year. And it's about really bringing together a merger of equals, right? Like, we know only healthcare as Aster DM Healthcare, and you're bringing up marquee private equity as Blackstone, and you've got a lot of synergies. Blackstone actually invests a lot in life sciences. So we get the best of both worlds in terms of knowing what's happening, what are the advances in healthcare, and how do we kind of really have that first mover advantage when it comes to what are the changes in healthcare in the future. So quite excited about what combining these forces could bring about for Indian landscape.
All right. Hi, Alisha. Good morning. Good to see you in. We've had Dr. Azad, who joins us on the show in the past, but good to see you in. This is Nigel on this side. Just to quantify the number that you put out, the merged entity is expected to see a EBITDA bump up of around 10 to around 15%, which will be great news, which bakes in those synergies you're talking about. But by when is this expected?
Yeah, so we think with all the regulatory approvals, that will take us around 12 months to 14 months. And we'll start the integration process over the next 12 to 18 months. So we should be able to see the additional 10 to 15% EBITDA margin expansion, maybe in sort of 2 years. 24 months to 36 months is when you really start unlocking those synergistic opportunities, to be honest.
Alisha, hi. Congratulations. Prashant here. Our colleague Rachna is with us. She broke that story first on the 5th of August. Rachna, congratulations. Go ahead.
Sure. Thank you so much, Alisha, for joining us. I wanted to know, like you said, it's one of the biggest deals in the healthcare space this year. So what are the challenges that you foresee in integrating operations of something like Care, which was recently acquired by Blackstone itself? They haven't been in the space for more than a year. And now with this merger, what are the short-term financial pressures that you're seeing? Also, what are the challenges in integration?
Yeah, so Rachna, definitely we know that when you bring together two big platforms, there are going to be a fair amount of challenges in terms of integrating people practices, integrating IT to get the right information. So healthcare is very people-centric, and people practices will be different in different sort of companies, right? And like you said, Blackstone has just come in the last sort of 8 to 12 months, and they've got 3 brands within them. They've got the Care brand. They've got the Kim's brand. They've got the Evercare brand. And then there's Aster Us. We are largely organic. So trying to ensure that there is alignment of those culture, the soft part of it, I think that's really important. So that's going to be the main focus. And then, of course, to add to that, we definitely want to make sure to act as an integrated platform. You need to build in the IT integration. So that technology integration is going to also be critical. So we're very committed to make sure that we iron out, especially the people practices, because that's what's going to really help us unlock the benefits of being the scale and become an integrated platform where you really can deliver care at a different level from a patient perspective and from a clinical outcome perspective.
Sure. I also wanted to understand, how do you plan to address bed shortages, considering that's a very big issue in India? Also, care is in Kerala, where Aster is also present. So how do you make this work in the same geographies, and what other geographies will you be targeting?
Yeah, so great question, Rachna. So we think that the geos are quite complementary. You're right. We as Aster, we're there largely in South India, but Care also has a lot of presence in Central India. So this actually ends up opening us from 15 city micro-market leadership to more than 27 cities micro-market leadership. So you're right. In Kerala, there's a bit of overlap. In Hyderabad, there's a small overlap, but actually we end up having exposure now to Madhya Pradesh, Odisha, Chhattisgarh, Tamil Nadu, a lot of new markets, which will be great for us to kind of expand into Central India. So we find that quite exciting, because when it comes to growth opportunities, we will have 10,150 beds. We already have close to 4,000 beds in the pipeline. And we also have a lot of cash on the balance sheet from the GCC transaction that happened in Aster. And Care is hardly leveraged. So that actually helps us make sure that if there are good opportunities, we are very sort of keen and opportunistic in terms of acquiring more beds and scaling it up further. So I think that's really the benefit of Blackstone coming in, as well as the way our balance sheets are right now.
And that's pretty interesting. So you're already hungry for more, and it could be through the inorganic route as well. Got it. So just very quickly, some numbers, Alisha, because if you look at the CAGR growth rates, then there's a bit of a differential. I think Aster has been growing at 25% odd, Care at more conservative, I think 10 to 15%. So just give us some numbers. On a sustained steady state basis, what's the top line growth that you'll aim for? You've already given us the margin picture. And on the balance sheet, since you mentioned that balance sheet strength and you're looking at more inorganic acquisitions as well if they come along, what's the cash on the books right now? Will you have to raise any more equity capital? Just give us an update on the balance sheet as well, and the level of debt that you will maintain. I mean, you won't go cross above a certain threshold, say.
Yeah. Sorry, your first question was around?
Revenue CAGR, and then the debt and the cash.
Yeah. So revenue CAGR, you're right. Aster has been outperforming its peers, and we have been growing much faster than most of the peers in the industry. We expect at a combined level, we'll still be able to be close to 20% CAGR. I think what has happened also is since Blackstone has come in, there's been a lot of investments that they've been making in terms of infrastructure upgrade. So I think there's been a little bit of a delay in some of those investments paying off. But at a combined level, we expect that we should be able to do still a 18-20% revenue CAGR over the next couple of years. When it comes to sorry, your second question was on the
debt equity.
Debt, right? So on debt, I think our comfort level is probably to go to around 2x, is sort of a comfortable level for us. So right now we hardly have any, I mean, there's no debt actually on the Care balance sheet, and and Aster India business is also like sort of under 1. So we actually have quite a bit of, you can take, I think, probably up to 2,000 crores of additional debt easily without any challenges. And that's and then you can add the cash which is there, like I mentioned, there's 1,500 crores of cash on the balance sheet of Aster from the GCC transaction.
Sure. Alisha, lastly, I'd like to know, are there any plans to make an exit from the India business, considering now GCC is separated, and with so much private equity action coming in the space, we're seeing many examples of promoter families exiting?
Yeah, so not at all. Dr. Moopen will be continuing as the executive chair of the combined entity.
Got it.
We've had private equity coming in for a long time, but we expect them to be journey partners and someone like Blackstone really sort of scale and build Aster further for us. But as a family, fully committed to being part of the Indian healthcare story for decades to come.
All right. We wish you all the best of luck, Alisha, from all of us here. And it's a big deal. And thank you very much for taking out the time and joining us here on CNBC TV18 this morning. Rashna, thank you.